Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, I'm going to show you how the stock market is back in neutral, so stay tuned. All right, we're going to start off here with the New York Composite, and I'm going to focus primarily on the New York Composite today. You can see the daily action here over the last week or so, how it just popped back. All the indices have done the same thing. The New York Composite is one of the broadest indices of the major indices here. It's the New York Stock Exchange Composite Index. It's about 2,500 or so stocks, so it's a pretty good indication of what's really going on in the stock market. And it was up 12.7 points yesterday, almost got a little bit of a reversal bar. It's a dark red in here, mainly because, let me look at this a little bit closer, mainly because it was an up day. It's a dark blue, actually. Mainly, and I'm partially colorblind. It's dark blue because it was an up day. That's why it's not red, but it closed below its open. Okay, that's why it's dark. All right, so that's the candle. That's what we've got. Now, this looks like we've just pulled back in here. We've still got the 10 below the 21 here. So the short-term trend has turned down, and we'll see where we go from here. Let's take a look at the weekly, and then we'll come back to the indicators here in a minute. On the New York Composite Weekly, you can see how this has broken the very long-term trend from 2009 back here in middle of the year. And the moving averages have rolled over here, and as this, it came down in August, and we snapped back up here to this resistance, which was the support at this one point in time, and then now became resistance, and it provided that resistance 3 weeks ago as that weekly rally tried to go up there, and then the selling came in and pushed it back down. Now, last week was really bad. Remember, last week I said, well, Monday could be really, really bad. I mean, it's just the way it looks. I mean, because everything closed so low. But we were very oversold, and that's why we ended up getting the bounce. And you never really know. You never know, are you going to crack and crack wide open, or is it going to take hold and bounce? And it took hold and bounced. Now, this is not an engulfing candle on the week because we did not close above the high of the previous week. So, yeah, it's come back, but it looks like it's primarily within the range of the previous week. So we literally got a down and up. So we'll see where we go from here. Let's go back and look at the indicators on the daily chart and just kind of get a feel for. Here's the RSI. You can see how it collapsed. We were getting all that non-confirmation of the move higher, and then we collapsed, and then we snapped back here. Potential little M top in here, but I say potential because we need a down leg for that to happen. The directional DI plus is above DI minus just for a couple of days. The demand, or the ADX, is showing no trend whatsoever at all going on, and it's actually down below 20. So declining below 20 even just validates the fact there is no trend going on with this move. And then the McClellan Oscillator. When I talked about getting back to neutral, here's where we were oversold. Okay, extremely oversold. Now we're back to neutral. We're back at zero. All right, the next thing we want to take a look, I'm going to look at gold and oil real quick, and let's jump into that. Gold dropped down just a little bit yesterday. Thought we were going to get a move up on Thursday, and I'm actually still looking for, it could continue pushing down here. Eventually, I'm thinking it's going to come down and take this out. What this really is an ending diagonal pattern down here. And you could actually take this and stretch it out even more, and you could see what's going on. I'm looking for a fifth wave to come down into this point, and this is a long-term support point. But it may snap back and do more of a zigzag before it does that. So that's what I'm kind of watching to see if a rally starts to come in here before it finally makes its last run to the downside. Oil just, over the last 4 days did nothing but trade within the range of Monday. Okay, we did not take out the high or low of Monday's trading range, and that's all we've done for the rest of the week. So when you look at it on a weekly chart, you can see the moving averages. Everything is super strong down, but it was just a doji type bar for the week. And we still have not taken out this low back here of August 28th. All right, the next one, I want to take a look at copper real quick and talk about what's going on with the global economy. Copper really is tied to a lot of economic movement, and when the economies are expanding around the globe, copper's going up, and copper is in the tank. And you can see how it's just rolling over and just plunging right now. Look at the plunge that occurred in 2008, and now we're rapidly coming back down here to the bottom that occurred back at the end of 2008, early 2009, but it's just not painting a very pretty picture at all. All right, 3 stocks I'm just going to take a quick look at that got killed last week. Chipotle Mexican Grill. Look at this. You know, down 12% on Friday alone, but you know, it'd been fighting all the problems that it was having with the that outbreak in its restaurants. And so in what was it, Oregon, I think it was, something like that. And I don't know if there was some additional news that came out on Friday or not. But when I look at this on a longer term basis, here's where I don't see any support coming in here until it gets down to around 470, 480. And that's a pretty healthy little move down still. But I just don't see any, where it's consolidated prior to that, given what it's doing right now. It's broken a very long-term trend, and then it's broken this intermediate trend. So it's not a pretty picture. And then Nimble Storage is another one. Look what collapsed, lost almost 50% on Friday when earnings were, they had a loss and disappointing outlook. I had looked at this stock back here on this day when Morgan Stanley issued an overweight recommendation on June 18, 2014. This line right here is the IPO day low. This is the low of the IPO day right here. You can see how it struggled. Once it got below it, it struggled to get back above it. And then when it started to roll over, the big moves always seem to happen with the trend. And the last one I want to take a look at, what just reinforces the global picture, is look at U.S. Steel. Look what's happening to it. This $9.61 is the 2003 intraday low from 2003. And if we look at this on a weekly basis, this is a horrible picture. I mean, much less the 2008-2009 fiasco. This is now plunging below lows, and I don't know. I don't have data prior to 1991, so almost a quarter of a century. So it's not a pretty picture on U.S. Steel. And what is that saying about the global economic picture? All right, that's it for today. I hope you found that helpful. If you did, please like the video. And also hit that little red subscribe button down there in the corner, and become a subscriber so you get updates on when I've got videos that are coming out. I am going to be putting out a lot more educational videos here over the coming weeks. And also check out the website. Head on over to joehentges.net and you can see that that is what I've got right there. So it's beyond the chart. All right, everyone, have a great weekend. We'll talk to you soon.